Your purpose as a trader, it is to find trades as early as possible and to make sure that you get bigger moves when you get those trades. So for an example, a trader must primarily target reversal instead of smaller waves. So here we have a beautiful move. The market was moving in a downtrend. As you can see, it was going down, but it seems like it is now entering in a reversal. But a lot of traders, they will usually get in this trade when it is late. So here is just a breakdown of how to actually find early entries. So if you can see here, I'm pattern allows analyzing using momentum. We have an impulsive wave going down, which was the wave of the sellers, and we can see that it is a very, very huge wave. And then after this wave, we received a correction here for the from the buyers, and then the sellers tried to push the market again, and they were not able to give us that huge wave as they did previously. So this was a very, very clear sign that something is wrong in the market. And then the buyers came again, but as well, the buyers, they didn't give us a bigger wave than their previous wave. So the market was a little bit stuck in a range for a very, very short period of time here, which is something that shouldn't tempt you to actually trade that range, because a range, for it to be a good range, it has to be a range that has been there for quite some time. So you shouldn't be tempted by these smaller ranges. And then the sellers, they tried to move the market down, and again they failed. They created another support level here. And then the buyers again, they tried, and as well they failed. So you can see that there was a pattern here. It seems like now the sellers, they kept on trying, but then they couldn't give us a bigger wave like that previous one, or even more than that previous one. So it shows that here the sellers were already slowing down. It means that the strength of the sellers was already dying just from here before even the market can start moving up. So usually when you observe such scenarios, that's where maybe you should now start looking for buying opportunities. Although the market hasn't started reversing yet, but you should start looking for buying opportunities. And how do you then look for those opportunities? You look for those opportunities by observing highs and also observing patterns. So for an example here, if you can just point out the highs, we have that high there, which I indicated by that range. We also have another high here. So you can see that we have these two highs, and then as long as the market is trading below this high, you don't want to execute a trade, but you have to wait for the market to actually break these highs, and then that's when you can make a decision. And also after breaking these highs, you have to make sure that you have received a lower low, because remember that the pattern of an upward move, it is higher highs and also higher lows. So you need highs that are high and also lows which are higher as well. So once the market break your level, for an example here, we can see that it broke our second level, and then you have to observe the lows. You can see that we have a low here, and this low, if you can see, it is higher than the previous lows, because you can simply draw your very small trend line. Then you can see that the market has been moving up. So this is a very, very good entry for you to execute a long trade or a trade going on the buyer side. If I go to a higher time frame, you can see that on a higher time frame, it is a very, very good opportunity. It is an early stage of an impulsive move, and you can see that we can have a move all the way up to that level if everything goes well. So in these cases, you shouldn't pay much attention into areas like those areas, because they happened a while ago and they resemble nothing, because here this area wasn't even verified. The buyers tried to push again, but they failed, and then that area was broken. So you shouldn't pay much attention into these areas. So you should only observe those areas when the market approaches them and shows you signs of going back. So if the market reaches here and then it gets stuck for a while in this area, then that's when you can now not exit your trade, but that's where you can tighten your stop loss and make sure that you pay attention into what the market is doing. And then when the market shows you signs of breaking this area, that's where you can scale in your trades. So this is how you should go about observing a reversal and also getting those early entry opportunities.